So I am obviously still playing. No. Oh God. Oh man, the music was playing still. Okay. Wait, did you guys someone call him? Okay, I stopped it. Oh my God. Okay. Okay, can you guys hear me now? Can you guys hear me now? Okay. Here it comes. Okay. All right. Have you guys okay, so now I have to okay, can you okay, it's okay, there we go. Oh my God. Okay. Okay, we're gonna start over. Okay. Hey, you know what? We're 9 minutes in, right? That's not a big deal at all. 9 minutes in. And I'm like thinking, you guys are lagging, like it's okay, you're gonna catch up. And then I'm like, oh my God. Okay, so we're starting over. I didn't really say anything that was that serious. Say it again. I have my eye drops, so we won't go through all that. What I was saying was, I'm happy to do a stream right now. We're gonna do more streams in the future, and maybe we'll do 3 days a week. We'll do coffee and crypto, and then at night we'll do bedtime stories in crypto. I was making a joke talking about getting live more often, and you can how you could tune in every day, and we'll be able to give you updated insights, because when you do YouTube videos, they're obsolete, right? In crypto, things can become obsolete almost immediately. So I think it's important to get on here as much as possible live. And as I said before, if you could hit that like button, that'd be great. Right now, the like button with concurrent viewers is sort of worse than the gold silver parity. So I want to try to get those to be as tight as possible. Now that is the third time I said that. Okay, so with each time it's becoming a little bit more trimmed down, but I'm happy to have you guys here. So what I was saying was I'm happy to do this stream right now because I'm not currently in any trades right now. I am in my spot Bitcoin just because we're at sort of a major, one of the more important major levels that you could be at within market structure right now. I just mentioned how market structure is not only obviously the structure of the chart, but it's a matter of where majority of the supply sits, okay, how the market is actually positioned. And in this case, what I was saying was that context is very important, and we're approaching an area and we're being accepted into an area where, and I try to simplify this, if you approach an area and you approached a previous point, whether it's a physical structure or anything that is to stop you from passing through, if you approach that same area again and there's less resistance, well, you're probably going to pass a little bit further, right? So think about it as, a major resistance is sort of like the bouncer at your favorite bar or club. And you're young and you're trying to go to that bar or club, and every time you go there, that bouncer is there and he pushes you back. If that bouncer is not there the second, third, fourth time around, you're probably going to get in, okay? And that's the way that I'm looking at the resistance right now. I'm looking at it as if it's a bouncer at a club. No. But what I'm saying is we're approaching an area where we had a significant amount of kickback, and the fact that we're able to kind of just creep into this area, to me, that spells a squeeze that's setting up. But I am being cautious because, as I said, and now I'm sort of going about this in a completely different order because I said it differently in the last two times before I messed up, but that's my fault. What I'm saying is, I'm very excited because I've been bullish on Bitcoin now consistently for the last 2 months. And I'm talking about the fact that it's exciting. It's sort of like I'm rooting for my team in a football game, even though I've never had that because I'm a Jets fan. But it's the Super Bowl, and we're in the third quarter, and we're up. We have the lead, but the game is not over. So I think that that's important to remind you guys, is that we're at a major level within market structure, but we're not off to the races yet. We're not off to the races. I think that off to the races means above 14K. So let me see all the comments now that finally you guys can hear me. I'm very sorry about that. I'm sure you guys got a laugh, right? But I hope that future viewers have the wherewithal to like pick a random spot within the stream to see if I ever caught up. Okay, hopefully they would see that the stream was an hour long, and I figured it out by then. Okay, so a few things to talk about. Glad to have all you guys here. Okay, I want to talk about this chart right here. I want to talk about, and the reason I want to talk about this is because we're actually seeing a very short-term correlation between BTC and gold. It is a very short-term correlation. This is the correlation matrix that we're looking at between Bitcoin, the dollar, Bitcoin gold, Bitcoin, the S&P, Bitcoin, and the VIX. So just some things to go over. when the S&P moves down, the VIX moves up, right? Inverse correlation between the VIX and the S&P. Now the VIX is priced based on S&P index options. Okay, so the VIX, the implied volatility index, it is going to be a volatility index. It is going to be inversely correlated with the S&P. I've said this in the past that if the VIX is moving up and the VIX is above 30, in elevated value, it's been an elevated value ever since the March crash, and this could sort of be this structural result as of the March crash. It'll move, or from the March crash, that will persist into the future, similar to the crash in the 1980s, how that changed the whole entire options structure or options market structure with regards to skew. Puts being more heavily, or rather puts being more heavily favored than calls, and sort of having that permanent volatility skew that we see in equity index options right now. But this is important, okay, because as of the last 24 hours, futures have been on the decline. S&P is down, not having exactly a great day, but Bitcoin is outperforming. And we see that gold is responding similarly as well. The dollar is down also. So I think it's important to know that this is interesting because Bitcoin is sort of in the short term decoupling. And I think it's because Bitcoin is at a major inflection point. And once we pass through the threshold of all of our current major resistances, I think that we're going to see Bitcoin become more of the leader. It's going to become more of the high beta upside capture leader versus that same sort of behavior to the downside action of the S&P as well. So Bitcoin is sort of like this higher beta play on equities. But I think that it sort of has that narrative right now, the benefit of having the strong case to be made for a hedge against inflation and to be able to outperform in this type of environment. So I think this is great, but mind you, I think it's really important to keep in mind that it is short term. So we're looking at right here, this is the Btc Vix correlation. So right now you can see that's a negative correlation. So when the VIX moves up, BTC is more often than not penalized. That being said, when the VIX moves up, it's normally because the S&P is moving down. As the S&P moves down, as markets are crashing, volatility will increase, the VIX will increase. So the S&P is not exactly moving down. It's not doing anything that's overly violent. So we could get rid of that. We don't really need to pay attention to that right now. We could look at Bitcoin and the dollar. The dollar is moving down. So Bitcoin is moving up, the dollar moving down. We've seen that sort of relationship prevalent as of the last few months. I think that is one of the more dominant correlations that has been consistent over time. That being said, 2 days ago, 3 days ago, this might have been the end of the last weekend, when the dollar was moving up, Bitcoin was doing its own thing as well. So I think that, again, we're at a point that, and I think that it's a result of us being at a major place within market structure where we go from being very sticky to being in sort of a place where Bitcoin is going to be accelerating a lot. And at that point, you're just going to see it outperform. So this is something that's worth looking at. If you want to take a look at it, it's at coinmetrics.io. It's your correlation matrix. It's just an interesting thing to point out right now that S&P is not trading tick for tick with BTC, and that's been the case as of the last, it's been as of the last few weeks. When it comes to equities, when it comes to traditional markets, I just want to take a look at, where did that go? I had something earlier. It was 50 cents post. Yes, this is funny. Now, mind the language, okay? He says, vote for Trump, he's out. Okay, F New York, the Knicks never win anyway. That's right. He doesn't care if Trump doesn't like black people, blah, yada, yada, yada. 62% for New York City taxes. Okay, so New York State, New York City, 62%. That includes federal and that includes state. That would be under Biden's tax plan. I'm not going to go on about this at all, but the important thing to remember is how people are going to respond post-election if Biden gets elected, and this is the presumed, if this is presumed to happen afterward, right? Obviously, it's not something that would happen overnight. Right now, this is not exactly in concrete, but what it means is that, let's say that I am someone who, has a ton of money locked up in investment, and capital gains will be affected as well. I am probably going to feel inclined to sell this year, right? More than I would have if I anticipated Trump going on to have a second term, where everything would pretty much stay the same as far as taxes go. So what we could see into year end, which would be an interesting dynamic to observe, would be equities to sort of flatten a bit, and to have some selling pressure due to the fact that people will be maybe taking profits or just closing out positions going into the end of the year as far as positions that are affected by capital gains. I'm not sure how this would affect certain retirement accounts. I'm trying to think of it. I'm at a loss for words right now. This is something that I should know right away. But as far as anyone who is trying to lock in at a better rate, at a better tax bracket, or rather in a better tax position, it would make sense to close that out in 2020 before the new year of 2021. I don't know why I don't say 2021. I say 2020, 2020. I switch it up all the time. So this is interesting because that is pretty crazy, although that's not the craziest it's ever been. But it's absolutely, it seems like, we'll call it, what I call it is, it's like theft. Don't want to get into it though, right? So let's take a look at the market right now, and then we'll take a look at some levels, and then I just want to take some charts. Okay, so Bitcoin, as of the last 7 days, you could see that in the top 15, in the top 20, Bitcoin is in the top 3. Okay, so Bitcoin right now outperforming pretty much all things. I think it's not that they're outperforming all things, or rather Bitcoin is, because you have Tron that's up. Okay, Tron 24 hours, 7 days, waves, all these things that were they're irrelevant because you can't really put on a substantial position in them. The benefit of Bitcoin is that it's the largest asset. You can put the most amount of capital behind it. So when Bitcoin puts in 5%, it's a lot more meaningful than if, XYZ 10 million market cap coin puts in 5% as well. Or excuse me, if XYZ coin puts in a 10% move, that's not that meaningful because how much capital was required to create that sort of impact? It takes a lot more money to move Bitcoin. So when it does move, it is, I would say, that much more substantial. I think that we're in a position right now, and I've been sort of saying this for the last week, where Bitcoin dominance is going to be increasing. So we said this in the newsletter 2 weeks ago, where Bitcoin dominance is going to be increasing. I think that what we've seen in the last few months is, yes, there have been tremendous gains to be had outside of Bitcoin. Bitcoin has been boring. It hasn't moved. It's been, volatility lately has been, if we look at Bitcoin historical volatility index, 17 weeks below. I picked this most recent high value, which is kind of arbitrary, but still it satisfies the same idea, or rather proves the same point. 17 weeks below a value of 44. Okay. Now, the most we've ever spent down in this area, to give you some context, is 7 weeks. So this is, by all means, this is a very boring Bitcoin. We've had a few moves here and there, but it's been big move, impulsive move, followed by, range consolidation, followed by big move. But there's been really no slipperiness in terms of the trend. We haven't had something that's gone on for weeks on end with directional conviction from the beginning to the end. We haven't had a blow off top, so we should be thankful because of that. So really, that's a good sign, though, because if we had something that had conviction at the end, normally that's an exhaustive push. That's when you have this sort of blow off top. And when you have a blow off top, there are people that are still hopeful that the trend is going to continue. But at that point, your blow off top is when there's really no more growth driver. And your blow off top was over here. It was retail. I think that your blow off top with crypto as a whole, as far as the market goes, is when interest rates rise again. So I think there's a bigger, and I've been saying this for a while now, I think this is all a bigger macro play. And if you're too zoomed in, if you don't have your trading account and your investment account separate, you're going to get lost. You're going to miss the forest for the trees. So that being said, Bitcoin is going to move very slowly. It's going to move sideways like most markets do. 70% of the time, markets will move sideways. Don't quote me on that. It might be some 75%. It might be 66%. Doesn't matter. More often than not, they're not trending. They're trending sideways instead of up or down. So I think that with all of the excitement that we've had in DeFi, with all the excitement we've had in Link, in ETH, Banana Coin, Tylenol Coin, Hertz, Ford, Toyota Coin, you name it, right? I think that what that means, all that attention is in one place, okay? And where attention goes, capital goes. So what we're seeing, and I said this in the last live stream, is people, through their interest in these other assets, are essentially short Bitcoin. right? They're long the dollar, they're long these other assets, and they're short Bitcoin. And what that means is they're essentially, you could consider them as a trapped position. Now, when Bitcoin starts moving up again, there's this fleet equality effect. And that fleet equality effect, what that means is that people that are crowded into all positions, okay, they have to leave their all positions to be chasing Bitcoin at this point because they've been in those all positions past the point of Bitcoin, giving them the more optimal entry, which would be at a more defined area, which we've been, I'm not tooting anyone's horn who's been on this position with me, but it's been this area. This was the first major retest of the best support and resistance flip you could have been given. And that being said, the stress was on the fact, this is going back a month now, the stress was placed on the fact that this was going to be messy. Okay, continuation is never clean. That's something that I always say. It's never clean. On the way up, it was messy. This whole thing was messy. This was messy. It shouldn't be expected that it would be any different from the other direction. Okay, so the point is, don't get lost. You had a major break in market structure. Okay, zoom out. There's a concept of take the chart, blow it up on a freaking piece of oak tag. If you're ever having trouble with the direction of a trend, take the chart, blow it up on I don't care, chart it on your wall. Put it on a chalkboard, but zoom out. Take 15, 20 feet, step foot back. Take 20 feet back and look at the chart. That was just like I was like that was my, I don't know. I must be some kind of robot and I just had a malfunction. But so that I didn't want anyone to get lost in that, okay, and to start really just forgetting what is taking place, and this growth driver that I think is very obvious, and people like Michael Saylor coming in, people like Twitter. I don't understand why people thought it was funny and laughable that those people were willing to get into positions here, not really caring too much about the fact that we're extended from the lows, right? Not really caring about any kind of argument against this, okay? The thing that people should focus on is that when people are taking Bitcoin and putting it on their balance sheet, they're taking supply off the market. There's only 21 million Bitcoin to go around, and I hate that argument. I hate that point. That's just overly broadcasted, but it's true, right? That's a very low float. Now, by equity standards, by even crypto standards, that's a very low float. So think of float, outstanding shares. That is a very low float. And you normally see that with very low floats and low float assets, and this is sort of a lot of the reason why people got into something like Wi-Fi and a lot of the DeFi pairs, is because low supply means reflexivity. Okay, there's only so much to go around. The price is going to jump dramatically when there's only a few left. Okay, so that is, I think, something that is important to go over in the beginning. And now we're in a position where people are still short Bitcoin. And what it means is if you are still in alts, that there's probably more pain ahead. There's probably more pain ahead. I would look for, people think that consolidation means that we're at the bottom. So if we looked at Wi-Fi, for example, or what's one that just kind of fell off a cliff, MTA, which was, I want to go into the things that I was confident in a while ago. It's just to show you how much it doesn't matter, right? I want to show you how much even a pundit or a trader's opinion doesn't matter. If you look at, I was confident in MTA back here. If you go to my posts, I'll put them up myself, where I'm saying, MTA is going to outperform. I think it's going to hit this value. It did hit values that I said, but it didn't stay there. Once it starts losing weekly market structure, it just becomes a vicious cycle. Because what happens is, if you are long, let's say that you are long up here and you're still thinking that there's trend continuation behind this, as soon as you are starting to approach your entry point, you're not thinking about upside anymore. You're just thinking, okay, maybe I'll get long again, but I'm getting out first. Okay, now I require a lot more confirmation. That occurs the entire way down. Every time there's a major drop, there is a dead space point in between where you have people that are looking at this as the psychological, that'll give me a little bit of comfort to get out point. And what that means is that there's a huge washout that needs to occur, where essentially this chart has to be something that is not even shared anymore. And that's the honest truth. Alts have to reach a point to where there is no more hope. And it's just completely forlorn, and no one is looking at this anymore as something that is going to put in a short-term reversal, because that's just not going to be the case. If Bitcoin continues to move up, you're going to see this vacuum occur where it's going to suck capital out from every single orifice and corner of the market. and people are going to chase Bitcoin. And that's why Bitcoin outperforms, because it is a low supply and it is front and center. It's a first mover. It's the incumbent. It is the sort of the pinnacle of cryptocurrency. It is the first thing that you think of when cryptocurrency. And as I say sometimes, it's sort of like what you use when you're using, you're talking about cryptocurrency when you use the word Bitcoin, right? It's that form. It's called synecdoche. It's sort of like if you were to refer to your car as your set of wheels, right? So let's look at the chat real quick, take some charts. We'll look at some important levels. And again, why am I not taking... So let's just look at this from a very basic standpoint. First things first, again, just to drive home these important points, because I think that it sometimes makes me want to, I don't know what to do when I see people just banging their head against a wall trying to short something. And what you want to do is say, hey man, you have a system. It's just the inverse of what you're doing right now. What you're doing right now is the antithesis to your success. If you just flip those signals, your trades are on the opposite sides of them. Why would you consistently look for shorts in this? It is shorts that help this thing go up. When I saw someone post this recently, and I can't remember who it was, and I saw it this morning, and I'll figure it out because I want to give them credit. But anyone who is short, they're looking for a pullback to get long. Anyone who's long is looking for a pullback to get long. Anyone who's on the sideline is looking for a pullback to get long. Everyone structurally is looking for ultimately the long with Bitcoin, but they're all going about it different ways. You have people that are bears that are saying, I have long-term belief in Bitcoin, but just right now I'm trying to short it. It's like, why? That doesn't make any sense, man. You're causing yourself so much harm on the entire way up. You don't realize, like I said this, I posted this on, so let's go to this because this is important. I posted this the other day. You're missing all of the major moves in the market, right? And there's only a few moves that you get. So let's go, where is it? It's coming up soon. So all these things I posted that are, okay, right here. This is equities, okay? The same concept applies to Bitcoin exposure. This is the growth of 10K invested in January 1st, 1980. Okay, if you were in the market all days, so you didn't get out of the market whatsoever, you would have $708,000. If you missed the 5 best days, okay, you're looking at almost a 30 to 40% decline in that value. Above that, and you're more than halved. Okay, so you miss the 10 best days out of and this was going to 2019, I think. So out of, this is a freaking 39-year period. I didn't even think of that. This is a 39-year period. If you missed the 10 best days, you have only captured half of what you could have caught if you just had been passively indexed the entire time. Now, that's sort of a perfect situation, but just to give you an idea of how much it drops off, and still, 50 days out of, what are we looking at? Let's just do a rough, I have to do this right now, and, I wish it was a math savant or savant period. So what are we looking at? 365, there's not, no, 258 trading days. So it might be 258, I'm trying to think if that is the case. So 258 trading days times 39 years, that's 10,000 days roughly. So, 50 divided by 10,000. Oh, that is, you miss a 0.5% of a day and you're out, okay? You have missed all of that essentially. So this is the point with mostly all assets, honestly. Especially, no, not all assets, because you're not going to look at, what you don't want someone to do is apply this to go, all right, I have to put myself in alts because I just have to believe for the next 39 years. This is about the S&P, which is, a basket, right? But I think that the same thing is with Bitcoin. Bitcoin represents cryptocurrency. It's more than just any individual asset. And the same goes with Bitcoin, where you can look at, I think it's 2 weeks a year that are really responsible for those outstanding years. Most of the growth takes place between a 2-week period trend. And after major breaks, we see that price trends for about 2 weeks. So after we've been in a range for, a 1 month consolidation, a 2 month consolidation, after we have a major break, so this break, that if we get this break soon, I expect that this to trend for a minimum of 2 weeks, okay? Now, that doesn't mean it's straight up. You don't want that. It means that it's a very strong trend to take advantage of daily pullbacks, right? So meaningful pullbacks, and to be confident behind. It doesn't mean that it just goes straight up, right? And it doesn't mean that that 2-week trend is going to make the entire year. It's just, the idea is you need to have some exposure. And the more you try to get fancy with it and the more you try to time your portfolio, you just can't beat it. It's like, time is the ultimate judge, and on a long enough time horizon, there's nothing that really beats holding. When you stack it all up at the end, it just, there are certain statistical anomalies, right? There are great traders, of course, but it's still, like, for me, even, I don't, so just to be as honest as possible, I am so focused on cryptocurrency and Bitcoin now that I know that I can't be an equities trader anymore. I can't be a commodities trader. I could look at the gold chart and I could take a position in oil or gold or the ES, but I definitely cannot take an active approach in those. It just would be very difficult. It would be consuming most of my energy, and how I can really allot for that energy. So for me, for equities, I've taken a way more passive approach. Okay, with cryptocurrency, I tell everyone, if you believe in the long-term value proposition of Bitcoin and cryptocurrency, and Bitcoin, mostly, when I say that, I'm speaking for myself, mostly Bitcoin, you can't afford to try to trade your entire stack. You have to just be willing to just put a certain amount away, not touch it, save that for a rainy day, let it go to zero almost, right? Even though that's not what we think. Just so you don't mess that up, because I think that a lot of people are going to mess up one of the greatest trends that is on its way, or potentially in process right now. So most important levels for me, I find out developing value, obviously. We get more into this on BlockRoots. I don't want to go too much into this on the YouTube until you guys are more familiar with the process and we do more of these live streams. Then we could get into more of the in-depth stuff. But, I have my weekly levels. I have my daily levels on the chart. It looks a little busy right now because this chart right now also includes my intraday levels. So sort of the intraday bounds, not the exact intraday smaller time frame levels. So I'll draw those on as I'm trading, just because they're going to be changing from day to day. And you can see that if I'm on something like Sierra, it's going to be doing that for me. It's going to be constantly updating the previous day's values. But I want to know, of course, where my weekly levels are, where my monthly levels are. So one of the more common things that's come up recently is a monthly level. So what I want to do is just get rid of these points on the chart. We'll go to a different Bitcoin chart. And just to highlight this is an area of focus for many. Okay, this previous monthly level was, and this monthly level now currently. And that's great, but remember, this is a monthly candle, okay? This is something that more often than not, so with how I approach monthly levels, at a first visit back to them, I know there's a trade there. I know that the first contact with it, it might overshoot. Maybe it'll overshoot by a single day's ATR or a half a day's ATR. But if we're approaching it as support, or if we're approaching it as resistance, I know that 90% of the time there is an intraday trade to be taken off of that. From that moving forward, you're really gambling with trading lower time frames around monthly levels. Okay, so right now we're back above the monthly level, and this is at 11,655. But for the rest of the month, we have 11 days and 8 hours left. So a lot can still change. I think that this is starting to resolve in a way that is becoming very obvious. And if you look at just Bitcoin's historical price action, there's been a time before we've actually crested a previous month's consolidation structure. So this period back here, so we've crested it. We've put in a decent amount of upside action, and then we corrected back within it. So I don't want anyone to get too hung up on monthly levels. When it comes to higher time frame levels, I say you're going to get that first interaction if it's the first visit back to it. They become more significant as we start to close into that period. So if we're the last few minutes into the monthly close and we're above it, what I say is right after, and this is not just what I say, this is what you normally see, right after a higher time frame close through a level, what you just did was trigger any sort of systematic or algorithmic strategy that's simply based around candle closes on the higher time frame. So you can expect that, the monthly closes above 11,655. Tom's system that's based on monthly higher time frame structure is going to go green. So what you'll normally see is right after a higher time frame close, and you can see this on a 4-hour chart, on a 10, on a daily level, it goes down to lower levels as well, but obviously there's going to be varying levels of significance in that response. You're going to see that there'll be buying pressure if you pass through a previous resistance, right? If we close let's say that we close the first 4-hour candle through a daily resistance level, you'll see right after that candle close, there'll be some pressure in the bid right away, okay, for traders that are trading around this sort of structural change. That being said, aside from those levels, I always say, this is something I always stress, the first major candle close to the downside. This is how a lot of people build their ranges. So on the way up, the same concept. It was the same concept on the way up, okay? this consolidation, first closing high, first closing bottom, that forms what to me becomes a very important inflection point moving forward when I'm also considering value area. So I take multiple levels into consideration, okay? Now, I have to know where these structural levels are at all times because there are other people trading around them. So you always have to, as I said, be mindful of how other people are operating, especially when it's for dominant approaches to the market. So this right here, simply put, this should have acted as resistance longer, right? There's no reason why we should be up here if bears are going to do a good job. When bears stop doing a good job at one level, we just look to the next. So that's why this level was so important to me. So that's why I've been saying for the last few weeks, just to be accurate, going back now to, I guess this is back in September now, that's why I said if we break back above this level, we're just looking back at this high. It's just a matter of, you pass one level and you typically move on to the next. It's never going to be clean, right? It doesn't mean just buy the first breakthrough, right? That's the point. That's where people get chopped up. It means look for some form of structural feedback that's telling you that, we're forming a base or there's strength on part of buyers at that level. We have good candle closes through the levels, such as a daily close to that level. Look for the signs of strength always. But it becomes very self-fulfilling. So it's very simple. It has been very simple, I think. And I think that, again, this is why I'm not in any trades right now. We're at an area that technically, this whole area has been an area where we found resistance. We found it further up, so I don't want to discount it too early. I don't want to get too excited. I'm not taking any spot position off because what do I think is going to happen? I think we're going to have something that does a little bit of maybe a decent pullback, but then gives us a freaking, Judas candle to the upside. That's what I think is coming, because what I'm looking at right now also is we're seeing that people are just adamant about betting against this thing. I mean, if we look at, so just look at this for example. Coinbase, BitMEX, okay, and I had Bybit, I guess I took it off. Bybit and BitMEX are trading at a discount to Coinbase. That means that Bybit and BitMEX are trading below the spot price. So those two prices should be more in line. We know that that doesn't happen because one is a derivative. But they should be more in line. So when one is far from the other, when there's a big deviation, it shows what side of the market is getting hit more aggressively on the futures exchanges. And it's just an idea of maybe who's getting trapped. So the spot, if anything, is showing more strength than the futures market. And the spot is going to be what puts in a floor for markets. So also the funding rates, 1 negative funding rate, 2 negative funding rate, 3 negative funding rate, 4, 5, 6. We have 6 negative funding rates out of 1, 2, 3, 4 out of 10 exchanges, okay, for swaps. Now, this is, again, an indication that people are still betting heavily against this trend. So there's a lot of people that still doubt it. And I can't really imagine a top is in, an interim top, a long-term top. They don't occur when there's negative funding on exchanges. They occur when there's positive funding, when everyone is behind the trend. Yes, we're all on now kind of together. No, we're not. It's too late now. You jumped in too late. That's why momentum traders a lot of time get, are the ones that end up getting hurt because they're sort of the pile-on effect that comes into markets. So I think as long as we still see this consistent negative funding dominantly across exchanges, there's really no reason to be that worried yet. So for anyone saying, yes, we're at resistance, time to be cautious, but I think we still have fuel to the upside in the form of a squeeze. Now, important thing to distinguish, because I guess this is a learning point right now as well. So we see how there's USD or USDT margin perpetuals, and then there's coin margin perpetuals. Now, to me, it makes sense why the USDT margin perpetuals are a little bit different than the Bybit coin margin perpetuals. So the coin margin perpetuals are a little bit less liquid than the coin margin perpetuals, these, are more liquid than the USDT margin perpetuals. So it makes sense that a market is harder to keep in line with the underlying spot index if it's less liquid. Because as you can imagine, any kind of pressure on the book is going to move price much more. And what they're trying to do is keep the spot price or the basket of spot prices with all the oracles making the index. They're trying to keep that and the derivative price in line. If the derivative that you're using, the derivative based on the spot prices is less liquid, it's going to fluctuate a lot more, right? It's not as sticky. So that being said, that's something worth noting, but I think that's such a negligible difference. Bybit's not exactly positive, it's baseline, so 0.01 is pretty much a baseline funding across exchanges. More often than not, that's sort of a default value. The fact that they're negative right now, majority of the exchanges, I think that means a lot. I think that means that we still have more upside ahead of us. Last thing before I look at some of the charts you guys ask about, everything is kind of underperforming Bitcoin right now. and I wouldn't look for it to catch up yet. So ETH, I think, is the higher beta play on Bitcoin a lot of the times. But right now, we're seeing an inverse relationship between ETH and BTC. So if we just look at ETH Bitcoin, which is obviously that is showing you the strength of ETH versus Bitcoin. So you really don't need to open a Bitcoin chart while you're doing that. But you can see it if you just look at the same. We're looking at the 4 hour on, we'll look at the daily on ETH, the daily on Bitcoin. You can see that they're just inverse charts, right? So this entire chart is pretty much right here, an inverse of what we've seen over here, which is more to the argument. What we've been saying is that ETH has been underperforming Bitcoin as of recently. And, there's a lot of reasons, right? There's a lot of reasons. A lot of it has to do with DeFi. I think, again, ETH was more overextended. ETH requires a little bit more consolidation, correction. One thing that is, I think, performing relatively strongly is Link. But, in the last, this is going back to ETH, the last day, it also has had a decent pullback. So that being said, I think Bitcoin is, again, it's going to be moving more on its own in the coming weeks. And I think into fourth quarter, we're going to see Bitcoin just leave things behind. 50 about to pay 60. Yeah, 50 is about to be 20 cents, right? All good, man. At least great songs. That break from 9K was a point where it made sense for a macro shift and for big funds to commit to BTC. Yes, and the funny thing about that, Stan, is, if we kind of go on about this concept of, when I draw these lines, I know that, it's not that macro hedge funds are doing this, right? But there are a lot of people that are initially looking at just something like this. There are independent investors. There are small asset managers that are looking at technicals. There are CMTs, right, that are looking at technicals. There are CTAs that are looking at technicals. And I think so many of the technicals are just speaking to upside. So if we could make it in a very simple way, right? So when we draw the diagonal, and again, the point I always try to drive home is that it doesn't matter how you draw this diagonal now. Okay, it doesn't matter if you're doing the wicks. You do the highest wick if you want. If you give it the most leeway, it doesn't matter. A lot of the times with diagonals, we see that, people draw what they want to see ultimately. It helps their confirmation bias. But there is none of that required now. There's nowhere that you could draw it, okay, that does not account for a more bullish structure or yield a more bullish structure. And I say that no matter what you're going to change, you're going to pass through diagonals either way as long as you move sideways. But on the same note, what that says is that we've passed out of that downward acceleration that we were in. And if you look at the diagonal, that was sort of a rate of acceleration. So that being said, the diagonal, the horizontal, the macro driver, big players coming into the space. And there are more people, and I don't want to say this as to be sensational, but it takes a long time for big asset managers, for big companies to be able to do something like that and then to go public with it. A lot of the time people have to sign NDAs. Things cannot come out publicly, right away. If you're a hedge fund manager, if you're managing other people's money, one of the most difficult things is putting together, that private placement memorandum, your offering, okay, where you're saying literally in specific terms, this is what our plan is. This is what our strategy is. Now, it can be broad in the beginning, and that's great. But a lot of the times, investors want to see a very specific approach to markets. So unless they're just passively indexing, that doesn't make sense because you're giving your money to someone to outperform the market. A lot of the time, hedge funds, major asset managers are going to have very strict specifications that they lay out in the beginning. Now, that's a contract. So I can't just go, hey, guys, guess what? I know you pay me 2 and 20 to make decisions, which is kind of it's going to be going out the window, that kind of fee structure. I know you pay me to make decisions, but guess what? I'm just going to add Bitcoin to the portfolio. I know, everything you see about risk, blah, 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 yada, yada, yada. No, they have to change the whole documentation with regards to their approach. So that takes a while. So you'll see that in the coming months, there will be a lot more people that follow and say, oh, by the way, and it could be a case where Goldman is like, oh, by the way, yeah, about that, 6 months from now, yeah, we added Bitcoin, we slid it into our macro approach, our basket portfolio for, it doesn't matter, right? At some point, you're going to see that there are going to be other people that are following that have been this entire time thinking about it, but have not wanted to say anything because you don't want to be advertising your intentions if you're a big player. You want to do the exact opposite. Okay. Some of the best calls in the last few months for traditional markets have been Goldman. Their, their price calls, right, have been Goldman. If they say something that they believe that something's going to outperform, just short it. A lot of the times, because a big presence in the market is not going to advertise their position, whether that's through public speaking or whether that's through, if we're talking trading, we're talking limit orders. It just it's the antithesis to getting filled for a decent price, or to getting a good fill to begin with. So ADA USD. Okay, let's look at that. Okay, so this is a too short of a time frame. I have to get a longer term chart so that we're ADA USD. Is there a longer one maybe that it almost sounded like I had an Irish accent for there? Is there a longer one maybe? I can have too much fun with this. My wife all day, she just busts around with accents. Bust out accents, bust around. Jesus. So I'm like still thinking about going off in an Irish accent. Okay, so just the most important level within the chart right now. Retesting this higher time frame inflection point. This was the only real level that your eye goes to right away, right? So retesting that from the high, this is kind of surprising to me because I don't know what ADA is doing as of recently, but this doesn't look like a bad chart, honestly. It doesn't look like a bad chart, but I have to look at ADA versus BTC because I have to know in the entirety how it is stacking in terms of relative performance. Because I think that's going to tell a little bit of a different story, and I don't want to get too myopic. And surely enough, if I was looking at, this chart, the most important levels are right here first. So these are my most important levels up to this point, right? And those are the first levels we're looking at to contend with. Makes sense, right? You can see on the way up, this is your resistance, breakthrough, your next resistance, right at those weekly levels, right? Those weekly levels do not lie when it comes to altcoins. So retest it, breakthrough. This is a big breakthrough already. This is exactly, ADA is at an exact location where you would want to see it act as support. You definitely want to see ADA act as support in this area. I don't want to start getting behind this as if it's so important. You definitely want to make sure ADA is going to use this as support because altcoins are fickle, right? The next week, this can be a 20 candle upward or 20 candle downward, and it'll still have given you maybe the impression this is a decent retest, but it's not right now. So far, this weekly candle is sort of doing away with the entire last 3 weeks consolidation for the last month. The USD chart looks a little bit better, but I don't think that, so put it this way, nothing is going to outperform what is performing decently well right now in the face of Bitcoin beginning to look like it's going to outperform. So I probably should say that again with more, a little bit more clarity. So look at the things right now that in the face of Bitcoin moving up are holding up well. Okay, maybe it's ADA. Maybe ADA is not, in the weekly chart, it's not doing well against Bitcoin when you're looking at ADA BTC. But moving forward, ADA is not going to perform better than something like Link. I don't think it's going to perform better than something like ETH. I think ADA has become a little bit more irrelevant lately. I don't think that it means that it's irrelevant. I think that DeFi, again, took a majority of the market share in terms of attention. But I don't, just to be honest, I'm not looking at alts yet. I wouldn't look at alts. So here's a good metric for maybe to when to look at alts. I think that in the beginning that ETH probably won't follow BTC. So I think that when BTC hits its stride, it's going to leave a lot of things behind. And leaving a lot of things behind, that's a temporary concept, right? That could mean it's gunning for 2-3 days and then finally takes a breather, and then you see some outperformance by things that have maybe need to play catch up. I think that the first thing that we see is that things that are offered on derivatives exchanges, so like ETH, for example, ETH perps, ETH futures, Link, I think that we see that when these get sold heavy after a big Bitcoin move, because no one's going to want to be out of Bitcoin when Bitcoin looks like it's going to make an all-time high, there'll be a big fleet to quality effect. I think that what we'll see, to simplify this, is that we'll see a lot of those get bet too heavily against. So what that means is it's going to be very difficult to keep the markets in line, and you're going to have negative funding. I think that when you see ETH in negative funding, I think when you see that, for example, Link perps are in negative funding, that could be used as more of a barometer to things outside of those initial pairs, right? So you could look at that and say, well, you know, Bitcoin has gone on its run. Bitcoin is maybe now consolidating. Everything else will play catch up. That's when I would start to look at your more popular macro pairs. So your bigger cap, you know, ADA, XRP, I even say, you know, things that I would look to maybe catch up and outperform while Bitcoin is consolidating. And mind you, I don't feel strongly about XRP as far as positive feelings go, but it does just, it still is like a higher beta BTC at times, right? There's no denying that. It can have a lot of overshoot when it comes to BTC. I don't think that it's going to outperform into the future, but that's when I would start looking at things like ADA more. Whenever we're seeing that again, ETH is beginning to outperform again, and you know this would probably be post some period where ETH has that negative funding or that compression in term structure at least. So algo, okay. So I wouldn't long Bitcoin right now. So that's just me personally speaking. If you're longing it right now, and so this is why I'm hopping on a stream right now, because I think it's a good time for me to do this, because at any point, if we get the break, I'm probably going to look for pullbacks. I want to be able to take advantage of that with swaps. So right now I'm just exposed spot. I am, you know, I'm, let's say, indecently exposed spot. I'm absurdly exposed to spot. And I don't want to take anything yet with leverage or buy anything more until we're cleanly above this level. And the level that I've been saying to focus on also, which is a zoom out moment again, is this value area high of this entire structure. Because again, I don't think that this matters up here. It matters from a psychological standpoint. I think it matters from a psychological standpoint. I don't think that it matters from a participation standpoint though. So where we've spent the most amount of time, what level really has priority in terms of what has been the most important levels within this chart. Or rather, where has the value been mostly confined over time? And that's between here. So we're actually at the value area high. And then you could see there's not a whole lot of activity that took place up there. It's kind of just a vacuum. So above this, you know, right here is where it really drops off is right here. That's a ledge. Now, normally a ledge in market profile, volume profile, we're going to look to that to initially act as resistance because that's an imbalanced area. So this is an imbalanced area. You can see that the distribution is not balanced whatsoever. Very much, in this case, it looks like a balanced distribution if you're looking at most of it falling in the center, fine, but this is a shelf. So this 11.8, 11.9 area is expected to act as resistance. That being said, once we cleanly break up and above, I don't think there's much more to do after that, honestly. I'll update as it presents itself, and I'll be the first person to say, oh my God, that's not good anymore. But right now, it's just not that case. So I wouldn't long Bitcoin yet until we get a very clean break above. And to remind you how I think about longs after major breaks like this, that means that I could be longing all the way up at 13K. Because after a major break, the last thing I want to see actually, if I'm bullish, is that we get a full retest. So after a break like this, I definitely don't want this to happen. You don't want that to happen. You want so much buying pressure to come into the market, similar to back here, to where there's no chance that this thing is going to come back and retest. You know, big break, flag all the way towards the high. And what that looks like is ultimately, let's say you get that break above, and let's just draw this hypothetical Judas candle, right? So what that looks like, that pullback, and I don't really use fibs, not to say, when I say that I don't use something, never take that as me saying that it's not valuable. Moving averages, so valuable. RSI, very valuable. All of these things, I just couldn't think of indicators fast enough because I don't really use them. But all of these things have their place in a system that dedicates its attention to that indicator, right? You build a system around any indicator, honestly. But that being said, when it comes to fibs, they definitely are very useful for pullbacks, especially. So if we, that's not the one I wanted to use, that's an extension candle. So let's use this one. A lot of times in a really strong move at the break point, you'll at most get a return back to that 382. Or usually, I don't even have it set up, is it 286, or what we're looking at more often than not in a very bullish structure, and if you see this form right away, it's a good sign, is a tight flag at the top. And that might make you worried because you're thinking, I don't want to buy it up there. You buy when you get a retest, right? You know, I learned that on baby pips. Not the initial one. You eventually might get a return over time, but you're not going to get it right away. And if you do get it right away, I'd be a little bit worried about something like this that does this right away. Because then honestly, I'm looking at something like that. Super crowding, a lot of volume at the high, and that unwind gives you that violent candle that comes all the way down here. And honestly, if I spot that happen fast enough, what I'll likely do is place bids that are stink bids all the way down here, anticipating that, okay, this is not maybe that strong, and it is strong, excuse me, in the short term, or excuse me, in the short term, say that correctly. In the short term, maybe it's not as strong, okay, maybe it's going to spend more time consolidating upward, okay, but I'm going to place bids down here to look for that wick that ends up leaving us back at here anyway, and then that's fine, we'll figure it out from there, but crowding up there with a return back, if you start to see that we move up and then we're all the way back here, I'm going to be looking down at the lows for one of those really crazy snap corrections. Okay. Yeah, great. D. Ross, that's one of my favorite sayings. Big ships take a long time to turn, or whichever way it's properly said. Lower high and lower low. Yep. Bang, what's up, buddy? Makes my day whenever that vol profile chart is pulled out. Do you see a GAN fan? I don't know. I don't know enough about GAN, honestly, but I do know people that use GAN, and they're still around trading, so they must be using it for some reason. There are certain things that I definitely have low hit rates and poor performance over time, but can be used as confluence. I see these things go through sort of cycles. So indicators go through cycles, and you've been around on CT long enough, you see this. I think that ultimately the market is moving finally towards a really mature approach, which is looking at sort of I think order flow. Well, first of all, order flow is something that you're going to see used in other markets more than you'll see. You'll see moving averages used in traditional markets, but there were, as I said in the beginning, a lot of strategies in crypto that kind of just made me scratch my head. One thing that doesn't really work a lot, and more often than not gives false signals, that I see commonly used is the TD9. And I joke around about it, but it is something that maybe you put just the 9 indicator on your chart and you use it as confluence if we're at major resistance. But I see so many people use that indicator, and it looks to me like it just prints the wrong signals all the time. I don't know a lot about GAN as the person or the indicator, but like I said, all indicators can be used successfully, so I don't want to say anything about it and hurt anyone's feelings. Right now, this is, it's in a really good spot. It is, again, if you were just looking at, I try to oversimplify things, if you were just looking at this as a 5-minute range, right, you had your move to the high, had your move back to the low, back to the high, this is a big deviation, right? You get a really strong response by buyers, though, and you would be looking at this on a 5-minute chart as sort of your trap continuation setup. So, what you're doing after this trap down here is you're favoring the highs from there really dominantly at that point. There's really no sign of any kind of, if you had sort of this rhythm in the beginning, there's not much of that rhythm anymore, and it's being bid up much sooner. So just sort of I always try to tell myself this as if I try to visualize it in a way of just strength versus weakness all the time, right? This is evenness, right? This is an even distribution towards the high and the low. Yeah, you get this really big imbalance down here, but boom, buyers bid this up right away. And after that, there's been no business lower at all. And again, the way that I described this just a second ago was that trap continuation pattern. And we have this on BlockRoots. And what it is it's a flag, gives you this initial spike up. And I'm not going to, I'll draw this a little bit more accurately. You get a spike up, right? You get this consolidation. It looks like price is giving you this even range, and then bang, you get a move lower, takes out these lows. And for me, it's not a long on that. It's a long if price trades back within what was sort of the more defined range. So I should draw that a little bit better. So imagine this is your range. Price looks like it is being evenly distributed throughout this. It looks like there's a relative stalemate between buyers and sellers. but then all of a sudden you do get this acceptance lower. And for some people, initially, they're going to jump behind the short position right away. They might market short because they're like 1, 2, 3, triple high, whatever. Then there's some people that are going to be looking to take this short because it's a backside retest, right? I'm not going to look for that right away, honestly. If this is off of a bigger move, I'll anticipate some form of a trap to the downside. And this is a long signal to me. So gaining acceptance back within this range, because at this point, I don't look at this so much as being important as I look at this as being an area where a ton of traders got too aggressive. And if anything, it just sets up a trade from here back up to here. But more often than not, you see that fuel leads to continuation. So after periods of consolidation, I could just use the Control X to clear all that stuff actually. After periods of consolidation, we went all the way back here, and it didn't occur this way right away. You get these big moves to the downside, right? It looks like things are over in these moves, right? Because they're engulfing, and then you get these V reversals right off of them. And that's because at these points, you had so much betting on more downside at this point, and it's from that betting that the market moved upward. Over here, it's a little bit different. Most of this has been a spot-driven market, which we should actually be thankful for, because that's an even better. There's a better bull market behind a spot-driven move than there is behind a. One really I think conveys more of an organic bull market than the other when it comes to being spot-driven. Yeah, I think that's a great pattern, honestly. And the same thing works to the upside. It's just flip a chart sideways, flip it upside down. It leaves out context when you flip a chart upside down, but the same thing occurs, right, to the upside as well. You could see this also at reversal patterns. Price might do something like this, break out, and then this might be your short opportunity right here, at least down to here. Okay, this is your fake out. Now, in crypto and Bitcoin, we've seen that now it's gone from, fake outs have gone from being something that occurs like this, 1, 2, and then it's right away, to now it's like, it's as if you could feel like, you feel like almost they're going through all possible permutations, right, or possibilities with this setup. Now it's like, okay, now we put in 4 tests before throwing in, a fake out to the upside, then a fake out to the downside. And if anything, what it gives you is after that initial fake out, it gives you that first setup because someone's trapped at that point. This structure is imbalanced to begin with, from liquidity building up on both sides. At one point, you get acceptance through, you're causing a lot of breakout traders to get triggered. And not only that, sorry to go back to the drawing board, but when you have a structure like this, you get a lot of people that are looking to market in right away, and they do it automatically. You have your market buys up here, and you have your market sells down here. And a lot of these people on exchanges, or a lot of exchanges now, they have it set up so once your buy order is triggered, okay, your sell order, your stop is placed right here, right? It's an OCO order. It's automatically put on. Same thing with a market sell, right? This area is broken, triggers your market sell for a breakout, and then your stop is placed right here. Now, my stop, your stop, everyone's stop who is being automatically placed, or that is being automatically placed from that breakout, that OCO order is actually what helps the move that kicks back in the opposite direction. You could think of as this order triggers up here, suddenly this area becomes very slippery with liquidity, okay, in the opposite direction. Because if you're market buying right here and your stop automatically gets triggered, that's why you see these sort of candles that go like this, right? These lightsaber candles. That's because you have, I think part of that is because you have these OCO orders that are immediately being placed on the book, and they're market orders as well. So as soon as price starts falling and failing into this area, it's boom, just the book vanishes because you get a ton of market sells at that point to close out those market buys. So I think it's important to know sort of the mechanics that are at play when it comes down to microstructure as well, because you could take advantage of these things. Now, I don't get too much into some of the things that I do specifically with the weird little nuances that I trade around, but some of them involve these sort of weird exploits, we'll say, where price is, it's not weird, it's, when price, for example, in that case, price is in a very tight range, and I would be placing some form of stink bid to look at taking advantage of, to take advantage of what is very likely going to be a odd follow through in behavior just because we have that crowded area. So I think it's very important to understand how things set up, right? What's taking place in the book when we pass through certain levels. Okay, so anyone want to talk about any other pairs? So this looks to me like squeeze right now. And I always try to exaggerate what I'm looking for when I'm looking at a squeeze occurring. And it's like when you have, let's just use this level right here. When you have a candle that now has grinded up, this is not grinding, but we didn't visit it vertically, right? That's why this was such an obvious buy, because we dumped down there. So if we just go back, we dumped down there. Be willing to step in front of a dump. Not willing to step in front of something that consistently stair-stepped its way up and is now grinding against. So when I see a candle that does something like this at resistance, and it's just pushing against it, like we're right at it, if you don't see any kind of immediate kickback, it's not there, right? What happens is you'll see that this actually is just accumulating sell pressure and just shaking it off. It's like no problem, no problem at all. And what that means is that the passive sellers are going to be the ones that get ran over right there, that are just blindly offering that, thinking, oh, I'm getting filled. Wow, I normally have trouble getting filled. This is weird. So, do you think of core? I don't know anything about core. I'll take a look at it. I don't know anything about core, so I don't like to give too much of an opinion on things that I'm not familiar with. But if I was just looking at this from a structural standpoint, we don't have too much structure to go off of, and I think that structure is not so important as it is with altcoins or DeFi pairs, because they're so thin. So they're all psychological levels. I mean, it's just from people looking at it. It's not really that this level accumulates, I think, a ton of buying pressure yet. Obviously, one prelude, the other one, a psychological level, can't even talk, leads to people placing orders. But I don't think that levels are that significant yet in DeFi. They're so thin that the level can just be nuked very easily, and it not mean that it's necessarily terrible. But I think we're just within a range, right? It's very obvious when we just put on daily and weekly levels. So if I don't know anything about this, but let's say we came down here to the low, broke it, and then we start forming a base here, I'd be willing to take a trade if I was in this or interested in it at all. Just personally telling you, I have no business trading this. I have no interest in it. I would probably take a trade off of that. If I saw some type of break and then reclaim, I would look at 10 to 13 initially. But this looks like it's, ranging. I don't think that if Bitcoin does well in the next few weeks that this chart looks the same. I think that this chart probably looks like this, honestly. I don't think that DeFi stands a chance to outperform when Bitcoin is outperforming. I don't even think there's a fighting chance that we see anything other than a complete, just imagine that there's a tsunami approaching, right? You're at the beach. Oh, it's a nice day. I'm in my alts. This is, everything's moving well. Yeah, things are stable. And then, why is the water going out right now? That's weird. Why are all the animals flying all at once like they're trying to escape Armageddon? That's odd. Yeah, I think that's the calm before. I think that's the calm before the storm right now. And if Bitcoin moves up, it's over. Some of the charts are just going to be just absolutely wrecked, and I feel bad smiling about it. But I don't know. It's insane how this market moves when it gets moving, and I think that we're kind of at one of those points. I hate to jinx it. Knock on wood. Knock on this desk I want to replace. But this is one of my desks. So at my setup at home, I have a pretty simple setup right here. And then I have two other computers that I rarely trade on anymore because one of them is a Mac. But I'm getting a new Mac, so that should be exciting. I'm going to buy the ridiculous new Mac, mainly because my wife also uses the Mac for design and some of the things that she's doing. I love Apple products, but I want to get rid of this desk because I took this desk because it's a really nice piece of oak, and it's an equestrian desk. So all the handles on it, the desk is freaking solid, man. And I like antiques. So when I see an antique, I really want to, I love antiques. So the handles are made of horseshoes that are, horseshoe that is turned into a handle. So there's a lot of character to the desk. It's really old. It's got a secret space in it, which is great. But I'm thinking of changing around my office. Obviously you can't really see what's going on, but I think I'm going to change it around and give it a nice little fresh update. Okay, Tsunami illustration, yeah. Just like seagulls, just, odd number of birds flying away right now. That's weird. Why are all the small animals running away too? I didn't know there's that many mice at the beach. um, let's see. So about Wi-Fi, I'm sure the last 2 days made some profit. Let's talk about Wi-Fi, and then let's talk about. I see someone says BTC to 11K. So Wi-Fi, yeah, I talked about Wi-Fi for a while now. This is the most important level, this red line I've had on the chart. That is one of the first most important levels at the chart in front of us, and then it's this level right here. So with Wi-Fi, it actually might have been higher. I think I was looking at more around 16K. Wi-Fi is just hanging out at a previous consolidation that it put in before this breakup. Makes sense, right, that it's going to consolidate there. I think Wi-Fi is coming lower then, and I'm going to stick by my 4-digit call and say that Wi-Fi is coming back below 10K. If things change, it should be pretty obvious, right? Most obviously, more recently support. More obviously, more recently, the most recent resistance. And this is an important level going back, right? So previous resistance back here. Just remember that it's not the line. Remember that. So when you take from these streams, don't go, oh, Ryan had this line and now we're above it. What's going on? Why is he still not getting long Wi-Fi? Give it a good amount of leeway. It's an altcoin. It's an area. So that means this. So here's a bullish setup for me. Nuke the low, reclaim this high. Very simple. So put in strength back above, right around 16K. Then we could talk about up here. So right around 20. But I don't think that we're in that place yet. I don't think we're in that place yet. As far as BTC, 11K by the end of the year. It's entirely possible that BTC hits 11K by the end of the day, right? It's not without question. If anything, I said, hey, you know what? I like to, like I said, I like to amp myself up, get excited. But as I said in the beginning of the stream, I'm not in any trades right now. I'm only in spot. I'm not looking long right now, and I'm saying that I think Bitcoin's going to go higher. So that's the sort of the discipline and approach that you need to have, where you know that, hey, the chart's moving up. That's a long, right? No, you need to have, the most important thing are the levels on your chart. So I have always, for my intraday setups, and my swing setups, levels that I know well ahead. I know, okay, my longs are located $200-$300 away to the downside, and to the upside I have longs, but just not where we currently sit. So I always have areas in mind where I'm looking for certain, I'm willing to do business at if I see a certain type of response. So that is where we start getting into the more, I guess, granular breakdown. We look at order flow, but most of that comes from higher time frame context, market structure, and developing value. And those levels are predetermined, right? Things can be bullish. I'm not looking long. That being said, can we hit I got away from what I intended on talking about, which is 11K? Absolutely, because what I was saying was we could get a spike like this and get this breakdown, right? You could get that. And that wouldn't make it, like I said, that wouldn't make it bearish in the long term. I said I would be looking to place stink bids if that looked like it was in progress. So let's say we flag up here and then suddenly you're back below this high. But that would maybe just mean we have a longer period of consolidation. It always feels like it's over before it is, right? It always feels like it's just around the corner and then you're 2 more months into a consolidation. This one has been in for some time now, and Bitcoin has a pretty consistent amount of time that it spends in these higher time frame consolidations before breaks. And like I said, the breakouts typically result in moves that last at least 2 weeks. So that being said, yeah, 10.9 wouldn't even surprise me. Let's say we get a break up, consolidate, break back down to 10.9. No, so no lower prices are out of the question. Absolutely not. Nice oak, yeah. Do you have any experience with statistical arbitrage or pairs trading in crypto? Not in crypto, in equities. I mean, in crypto there are, and not like I had any kind of systematic statistical arbitrage approach, but if you're recognizing that there are certain pairs that do have a very distinct relationship, absolutely, I think in crypto you see that exists. Especially since there are plenty of cases where there's prolonged periods of inverse correlations, or periods where there is correlation, and maybe that correlation, for example, let's just talk about ETH, BTC, for example. Stat arb, right? BTC goes on to outperform. ETH is normally at this predictable relationship, or has this sort of normal buffer between BTC and ETH. And we could see, for example, maybe in this period that ETH is really behind. And I'm trying to oversimplify this as much as possible because you brought up stat arb, and I don't think anyone is going to know what you're talking about. But if we normally see that they move at a certain lock and step, then yeah, there are certain stat arbs to be taken. They're manual though; it's not the stat arb that you might normally think of if you're thinking sort of systematic stat arb. Definitely plenty of plays to be taken though on that sort of relationship, or rather on the basis of relationship in crypto between individual pairs. Do you think it's okay to stay in Link? I think that Link probably does what ETH does, which is suffer initially, but then catch up even more. So I think, so to be more clear, ETH is higher beta to BTC consistently. So ETH might suffer in the first day or two that follows, but I think ETH will always go on to sort of outperform. I think that doesn't mean that you put ETH as your majority, allocation or portfolio. I think that Bitcoin is a more stable pair, so it deserves more of an allocation. That being said, ETH and Link, I think that Link actually was leading slightly from time to time in the past few months. So I think Link is becoming more of becoming more of what we need to consider when we consider the main cryptos that are light years ahead of everything else in terms of importance. So I think Link is definitely one of those. So what that means is if Bitcoin goes on a run, let's say Bitcoin goes on a run the next week, and we see that alts are getting creamed, ETH is sideways, not performing as well, Link is the same thing, I would definitely get in Link. I'm already, like I said, I ended up getting stopped out of my Link trade. But I'm already filled for spot. I just missed one fill, and again, I'd say I was that close, right? My last fill was at 8.15. Either way, already. I mean, as you can imagine, already marketed in that position. So it's not like I should even keep bringing that up because it's not like I was like, oh, I missed my fill. I'm not going to fill this remaining portion. But just to show you my intentions for Link are long. I can't. Let's see. Oops, short BNB, good short. I don't know. BNB, let's take a look at it. And then we're going to wrap this up soon because we're about an hour and a half into it. Let's see. Let's look at a longer term chart. I mean, Binance Coin, I think, has performed relatively well, right? First area that stands out right here. So if you lose these highs, I'd be looking down here for Binance Coin against BTC. Again, a lot of things have suffered because DeFi has sort of taken all of the attention. And I think that if you didn't get attention already, that you're not in a good place right now, because I think we're at the point where there is that slingshot effect now between BTC that's going to take place where people were not paying enough attention to BTC, and now we're going to see this massive exodus into Bitcoin. So I don't think Binance Coin, that's Binance Coin up. That is a interesting derivative. So let's look at Binance Coin Tether. Where is it? Is there no regular? Oh, there we go. That's why. Okay. Yeah. I mean, it's in still a longer term uptrend. I don't want to write this off or anything, but it doesn't look like it's on the. It doesn't look like it's on the cusp of a breakout yet. But it's. Yeah, I think I kind of forgot about Binance Coin for a while now, but just look at Binance Coin as a belief in Binance the exchange, and I think that they're going to be around for some time. I think that this is going to appreciate with the rest of the crypto market as well. It's sort of an incumbent, like I said earlier about Bitcoin being an incumbent. I think Binance Coin is up there too. Sometimes I forget about certain coins because I don't trade them actively. So mind you that my lack of acknowledgement to them doesn't mean they're not important. Okay, no, SXP I don't think is a good time to go in. That's my opinion. I looked at a chart last time. I mean, everything right now is going to be underperforming. This is no, man, no. You're probably looking at SXP at least down at these points. Everything is going to get crushed if Bitcoin moves up, and that's not even hyperbole, right? Everything is going to get crushed. What do you think of gold USD. I think that right now it's moving up. The dollar's moving down. We see the inverse relationship, but I think that gold is going to gold. All right, so you got to understand. I said that a break of all-time high is majorly important in traditional markets. The last time the gold broke its all-time high, just to remind you guys, they didn't go on. So a reflexive asset. So you could say gold is semi-reflexive, but a reflexive asset is going to maybe overshoot a lot, right? Bitcoin is probably going to, after it gets above 20K, there'll probably be a freaking $10,000 candle before it retests all the way back down to 20K. Gold, not a tremendous amount of overthrow. Big by gold standards. This move was, awesome. But it after that break, that's just a good sign for the macro case, I think, in terms of progression over time. It's gold has gone on to put in consolidations that have lasted years at a time. The last break of the all-time high, I mean, for example, going back all the way back to here, so we'll just extend this. I mean, this was a period of chop. It was great trading back then, but it was a period of chop that was, if you just go from the period at which it, tapped, then consolidated, that's different. But the break and then to final just covering that after that drawdown after the initial break, it took over a year, took over a year. Gold has only been exciting this year. It was not exciting for a really long time. I mean, the last year and a half, but it was not. Look at this. That is a freaking long range, man. That's a big range. Awesome, but I expect this to persist, but I don't think it's going to just correct upward now. Unless the dollar starts falling off a cliff. But again, I don't think the dollar is going anywhere in the long term. I don't think it is. But I think we're going to wrap it up. Okay, so if ETH drops 30%, let's just use those figures. I think that if ETH drops 30%, then Link probably is similar to that in terms of downside. It'd be cool to see that not happen, but if I'm just going to take an educated guess, I would say that that's likely to happen. So, but I think that does it, guys. It's an hour and 35 minutes into this, an hour and 24 minutes. I'm really sorry about the sound in the beginning. Really sorry about the sound. I'll have to put an edit in the description to mention that. That's just, it's ridiculous. Look at me trying to get all fancy, putting music up, and then of course it's like, I feel like the kid who's like trying to show off and is like doing a wheelie in front of a girl on a bike and not paying attention to where he's going. So short story, when I was a kid, I messed myself up on many occasions. I was like a total, not a rambunctious kid whatsoever, but every activity you can imagine, pushing the limits as a kid. And like, I'm happy to be here with all my limbs. But one thing I remember was there was this girl, and I probably was like 11 years old. She lived on my block, and I had a crush on her. She was probably like 25, honestly. And you ever try to ride a bicycle by switching your hands? It's a horrible idea. So you do one of these. You put your right hand on the left handlebar, and you put your right. I don't know why I did it. When you're young, you think anything's cool. But I remember thinking like, oh, this is a cool thing to do as I ride by. And the moment I put my hand on the wrong side of the handlebar, I just ate shit. Just full speed. Just down to bone on the elbows. It's terrible. So I'm talking about, what was I thinking about? Something about showing off. So I'm sorry about me trying to put the music on at the beginning and causing that temporary delay. But yeah. And about that bandage that went on my arm whenever I took my skin down on my bone, it was the wrong kind of bandage. So my scab healed over the bandage, and I had to have it pulled off again. So anyway, that's disgusting. But I'll talk to you guys soon, and we're going to be doing these streams. I'll be doing the earlier streams 3 days a week. We're doing a bunch of big changes. Yeah, so I look forward to doing these, and I think it's important to do a lot of live ones because, again, there are times when you do a video, you record it, you edit it, and then it's over. It's already too late. It's like sometimes when I'm writing the newsletter, honestly, I'll write the newsletter and then I'll have to, pause to do something. Life shows up, and I'll go back to the Bitcoin chart and I'll be like, well, that little level that was important right there, it's already happened. So, you can imagine how that is how that affects doing the videos, which take a long time. Okay, guys, it's been a good time, and I will talk to you soon. Everyone have a fantastic morning, evening, night, wherever you are.